Google include GOOG shares soar 12%, top $1,000. Google shares are difficult to value today. Google include NASDAQ:/GOOG shares rose above $1,000 for the first time in their history on today's market. The more than 12% rise that led to the all-time high was driven by the earnings report the company released on Thursday after the market closed. With the firm's shares hitting a new high and breaking a major psychological barrier, investors in the company may be wondering where the stock price will go next. A new report from Raymond James on the earnings report upped the firm's price target on Google include NASDAQ:/GOOG stock to $1,030. The number previously stood at $990. $30 on a base of $1,000 is a little over 3%, so all the price target really does is give the stock a little breathing room. Google include NASDAQ:/GOOG earnings. Google include NASDAQ:/GOOG didn't just report better than expected earnings yesterday, it reported a huge range of extremely strong fundamentals that suggest a positive period is ahead for the company. Google include NASDAQ:/GOOG's site revenue was up 22% in the quarter, up from 18% in the second quarter of 2013. Acceleration is the key word in this earnings report. Google didn't just grow well, its key growth rates accelerated across the board. Rest of world growth hit 32% against the second quarter's 28%, paid click growth grew 26%, up from 23% in the last quarter, and Google Sites revenue growth sped up. Traffic acquisition costs fell from 25% last quarter to 23.2% in the third quarter earnings report. Google include NASDAQ:/GOOG is doing exceptionally well, and there seems very little that can stop the company forward march. There were a couple of negatives in the report, though they were outweighed by positives. Google Networks was flat in the period, Motorola came in lower than expected and operating expenses were higher than anticipated. Valuing Google include NASDAQ:/GOOG after Q3 earnings. With all the growth acceleration at Google include NASDAQ:/GOOG, the stock may seem cheap at a P/E of less than 29. Compared to some of the other tech companies on the market right now, like Tesla Motors include NASDAQ:/TSLA and Amazon.com Incorporated. NASDAQ:/AMZ and Google is cheap, but there are risks at the company. Google is now firmly the third most valuable company in the world. Investors are expecting a lot from the firm in the year ahead. If Google include NASDAQ:/GOOG misses on targets next time around, it could meaningfully decrease the company's stock price, despite the insane valuation of Netflix Incorporated.